A lot of consumers, hard pressed, are at least getting government aid. And we're hearing that loan delinquencies are down, especially for borrowers on a tight budget, a lower income. This government aid is helping. So what does it mean for the payday loan companies, often the target of controversy? We're joined now by Scott Satov. He's president of Loans Canada. Scott, thanks for joining us. Just remind us, what does Loans Canada do?
Sure. Thanks, Andrew. I'm a chartered accountant by trade and a CFA holder as well. We started Loans Canada 10 years ago, and we were the first loan comparison site in Canada. We've grown since then. We've morphed, and we've turned into a financial education platform where people can get all sorts of information about loans, credit, and find products that will suit their individual needs.
One thing we're hearing is that the payday loan companies, who are controversial for the high rates they charge, governments have tried to rein in some of the fees, are suffering here because people, especially people who are subprime borrowers, are getting help from the government, and so less inclined, and their spending is down, so they're less inclined to go for this costly credit.
Yeah, I mean, that's definitely the trend right now. I mean, over the past couple years, let's say 5 years now, there's been a lot of scrutiny on the whole payday loan industry in Canada in general. Provinces have clamped down, adding a lot more rules, reducing the fees. It's a problem because for this subprime group or demographic, it might be the only credit that they have available. So there's a balance between, providing these people with credit and also trying to protect them from extraneous interest rates and fees, etc. So with the CERB and the CEWS that have come into Canada, it's been great because the people in this demographic have reduced their spending quite a bit, used the government funding, and reduced their need for these high interest rate short-term loans, which I think will be good for the population in general.
Of course, it's a big issue, isn't it? I mean, low wages, insecurity of employment are part of the broad problem. But isn't that interesting that these payday... Sorry, go ahead, Scott.
Yeah, there's no question about it. I mean, it's certainly it's a subject that's been around for a long time, and it's not an easy subject. I mean, people have emergencies. They lose their job. Their kids need dentists, or their car breaks down. So this was the last alternative. A very high interest rate. It's governed by the provinces, and rates can go up as high as 600% annually, which sounds a lot. Very high, but they're small denominations, and basically over the past couple of years, each province has implemented their own rate structure, and the rates could be basically $15 to $20 per 100, but it's a very short-term loan. It's over 14 days.
Whoa, that's kind of Tony Soprano country, all right. Give us an idea of who owns this industry. We know big chains like Cash for You, Cash Money, Money Mart. I can't think offhand of any public companies that are involved in the payday loan industry right now.
Well, first of all, there's 3 companies that control 65% of the market in Canada, and that's Cash for You, Money Mart, and Cash Money. So the 3 of them control 65% of the market. I'm not sure if Money Mart is public, but actually it is. It's owned, or might have went private, but it's big enough to act like a public company, as are the other 2 as well. The other 35% is mom and pops who apply for these provincial licenses and who have to comply with all the rules and regulations so that they're on above board with their clientele.
Of course, in the States as well, they've wrestled with regulating these things. I suppose they can always say, well, we provide a service, and the banks in many cases aren't interested in servicing this lower income group.
Yeah, I mean, this is really operating outside the bank interest. The banks are sitting on the top, and they dabble in the subprime with their credit cards and some of their lines of credit products. But for the most of it, they're dealing with the prime, with a mortgage, very low rates, very low risk. When it comes down to the small denomination, last minute loans to help out this demographic, it's really the payday loans that have dominated the industry. Over the past couple years, there's been some installment lenders that have come into the market, and they have a lot better rates, although they still could be quite high. They're governed by the Canadian rule of 60% across the board, which does sound high, and it is quite high, but at least they're better than the payday loan trap, and you're able to amortize the loan over a 3 or 4 year period versus a 2-week period in the payday scenario.
When these government benefits run out, presumably some people will be forced back to the payday lenders.
Yeah, there's no question about that. I mean, right now, everyone was surprised to see the demand for loans fall off so much as these government subsidies came into play, which is great. And people reduced their spending, so they've been relying on this government incentives. And the question is, when that comes off, are they going to go back to this payday loan trap? And we're hoping not. But I'm sure they've learned, though, to reel in their spending, which is the big part of it. So you don't get caught in a situation where you need these short-term credit vehicles. And like we said, the rates are so high, they're very prohibitive.
And longer term, I suppose there is discussion of a basic income that would, whether people are on welfare, if they can't find work, that would guarantee people a certain level of income. And that presumably would help diminish the demand for these payday loans.
No question about it. And we hope that they do. The payday loan companies have adapted a little bit, allowing some of these subsidies to be considered income in their due diligence and underwriting. So they're aware that people are using more of these government subsidies. And now the question is, are the people going to rely on the payday loans, or they're going to reduce their spending, or how are they going to finance some of their activities?
And just longer term, I mean, the banks in some cases have brought out bare bones accounts. And I think they say that they've reached out to lower income communities. But have they really been serious about trying to provide regular banking services for a large segment of the population?
The big banks have so many opportunities in the prime scenario and there's so much extra work to deal with, and management of these loans, and all the other qualifications and changing of loans and deferrals, that they don't really focus on this demographic. They leave that for smaller, more nimble players. But they always will get involved somehow, especially if they could have a security and a mortgage or a line of credit tied to the other banking accounts, that they'll dive a little bit into subprime, but their real main focus is the prime part of Canada.
Scott, we'll have to leave it there. Scott Satov, he heads up Loans Canada.